Nvidia has shed more than $500 billion in market value since briefly becoming the world's most valuable company last week. The chipmaker's shares fell almost 7% on Monday, sliding for a third consecutive session. Nvidia's reversal has weighed on the broader chipmaking sector and other tech companies tied to the artificial intelligence boom. The tech-dominated Nasdaq fell 1.1%. Nvidia, whose gains alone had been responsible for roughly a third of the S&P 500's increase in 2024, is now down about 16% from Thursday's high of $140.76. Its market value now stands at $2.9 trillion. Let's get more on this now with Josh Mahoney, Chief Market Analyst at Scope Market. Thanks for being with us, Josh. Now, what's behind this sell-off? Has the AI bubble finally burst?
Well, I wouldn't say that the bubble has burst, so to speak. I think that in any market, there's going to be pullbacks and retracements. And certainly when you see a stock like this becoming so overextended, at some point it's got to have a little bit of a breather. And on this occasion, a breather is almighty in size, like you said, $500 billion wiped off the market cap. But this comes off the back of a 6-month period, of course, as we round up the first half of the year, where we've seen the stock going from 1.2 trillion in market cap up to 3.4. So, you know, that can't go on forever. We've seen a bit of a pullback at the moment. We're, of course, seeing quarter end, so potentially some rebalancing of portfolios. But really, it's a healthy move for it to happen. Essentially, the worry that people had been thinking about the wider market was that the strength of Nvidia was masking the weakness seen elsewhere. And so this is an opportunity for the rest of the market to finally come into the light and say, hey, we're not just Nvidia. You know, it's the S&P 500. There's another 499 stocks within it. And so as we see this pause, some of the other sectors come into play. And so people are really talking about rotation at the moment rather than the beginning of a wider capitulation.
That's right. Nvidia has really taken the limelight. Now, this has also led to a broader sell-off across Wall Street. Tell us more about that.
Well, it's very specific exactly where we're seeing that selling pressure. As you've highlighted, we've seen it within the semiconductors. We've seen it to an extent within some of the big tech, but to no extent that matches what's happening with Nvidia. Nvidia down 6.5% yesterday. We certainly saw minimal losses in terms of the other big tech names because they haven't run as far recently. But if you look at the rest of the market, they're actually doing relatively well. The Dow Jones Industrial Average, which has been lagging owing to its lack of Nvidia, moving into positive territory yesterday and seeing some nice gains. So by and large, it's a very lopsided market. It already has been in favor of semiconductors and Nvidia. Now we're just seeing that flip on its head, and we're seeing some strength elsewhere in the markets, in particular in the energy sector.
Right, and over in Asia, markets which had been on a downward trend recently have reversed losses. What's going on there?
Well, I mean, you know, it depends where you're looking, because the Chinese markets in particular have been the area of weakness, and there's good reason for that. Of course, you've got the concerns around the economy, you've the concerns around the continued delaying of the interest rates cuts over in the US, the possibility of Donald Trump coming into power, what that might mean in terms of a breakdown in relations between the US and China. And so the Chinese markets really are the sort of recent laggards. But we've seen some strength elsewhere, like you pointed to. We have seen some upside over the near term, in particular the likes of the Japanese markets, as we see the Japanese yen continuing to come under pressure. That comes to the benefit of Japanese companies, of course, as it makes them more internationally competitive from a price perspective. So China at the moment continues to weigh a little bit, but from a wider perspective, things still do look very healthy.
Right, Josh Mahoney, thank you very much for your analysis. Now a quick look at some of the top business stories from around the world. Argentina has entered a technical recession in the first quarter, with GDP shrinking 2.6% from the previous quarter. Job losses increased as President Javier Milei implemented austerity measures to restore fiscal order. The jobless rate rose to 7.7%, adding 300,000 newly unemployed people. Despite spurring markets with his focus on fiscal surplus, Milei's policies have led to rising poverty and homelessness. European aerospace giant Airbus has announced it will deliver fewer aircraft this year due to supply chain problems. The company also revealed a $965 million charge for its satellite business. Airbus now plans to deliver around 770 commercial aircraft in 2024, down from the 800 it initially forecast. A renewable energy initiative has urged the Japanese government to update its energy policy and invest in renewable energy sources. Global Climate Initiative says Japan needs to triple the amount of renewable energy sources to reach the desired level by 2035. Despite promises from the government to achieve carbon neutrality without a concrete plan in place, Japan still heavily relies on coal. And Dubai has announced an $8 billion plan to build a comprehensive stormwater runoff system. This initiative comes in response to the unprecedented rainfall the Emirates saw in April, which caused severe flooding. The drainage network is expected to cover all areas of Dubai and will have the capacity to absorb more than 20 million cubic meters of water per day.